So we're almost to the end of the year. And if you're like a lot of solo business owners, either running a sole prop LLC or a sole prop LLC taxed as an S-corp, let's keep it real here. You probably haven't done any sort of tax or financial planning. So today we're going to help you guys out. We're going to go over 3 action items that you should look into before the year ends. I promise you, you don't want to miss it. Welcome back, guys. Be sure to hit that like and subscribe button if you like today's content. And as always, if you need help with your own financial plan, reach out to us at www.modernwealth.com. That's modern spelt with no vowels, wealth.com. So as a financial planner with about a third of our practice being solo business owners, I can tell you we get a ton of new clients knocking on the door in December and November wanting to do tax planning. And while yes, I'll gladly accept you guys with open arms, it also makes me want to pull my hair out because the reality is tax planning is something that should be done year round. But I get it. Sometimes you got to do what you got to do and you got to do things last minute. So if you are one of those people, here are those 3 items we typically review and execute on before the year ends if you're a business owner. So the first item we want to review is your profit and loss statement. Now, I know that seems super basic, but if you're someone who doesn't have a bookkeeper handling your books and you have a sloppy profit and loss statement, there's a good chance you have no idea how much you've even made this year. And if you have no idea how much you've made this year, it's extremely difficult to do any sort of robust tax planning, tax projections, incorporate any fun tax strategies, right? You can't do any of that if we have no idea how much you made. So if this is you, get your profit and loss statement cleaned up. If that's the only thing you get from today's episode, it's to get your profit and loss statement cleaned up. Because boy, I gonna drive me crazy, but it is insane how many people we work with who run companies have zero clue how much they've made through the year. Zero, right? I've had people tell me they're making well over 6 figures. We take a look at their profit and loss statement. It turns out they haven't made anything, right? It's bonkers, absolutely bananas. So again, if this is you and you're using something like Excel to keep track of your profit and loss, I would encourage you to use something like, at a minimum, QuickBooks that can automate your bookkeeping process to some degree and keep things organized. And if you have the cash flow, outsource your bookkeeping. As a business owner myself, that is one of the first things I outsourced with my business is bookkeeping. It usually isn't crazy expensive to outsource, and it usually helps a ton with keeping your books nice and clean. Now, with all that being said, if you choose to outsource it, I wouldn't be someone who just never checks your QuickBooks or never checks your profit and loss statement. I would still make it a habit to at least check monthly to see how your business is doing. But bottom line, again, if we're going to do any sort of fun tax planning or tax maneuvers before the end of the year, you got to have a rough idea of how much you've made, and it all starts with that profit and loss statement. The second item we want to review is tax withholding. Now, this is more applicable to someone that is a solo member LLC taxed as an S-corp, but an extremely common scenario that we see with folks who are S-corps is the only form of withholding they've done is just the standard withholding from their salary. They haven't done any sort of additional tax withholding. They haven't done any sort of quarterly tax payments to account for the profit on top of their salary. So if you're someone who, let's say, has made 200K profit, and of that 200K, 60K is classified as salary, we see a lot of business owners withhold the mandatory taxes associated with that 60K, but then don't think about the remaining 140K of net profit. And again, if that is you, there's a good chance you're staring down the barrel of potentially a large tax bill come spring. Now, if you're thinking, well, that's no big deal, I'll just pay that tax bill before the April 15th deadline, what you're forgetting to factor in is the IRS wants to get paid, right? Just like you, the IRS wants to get paid, and they want to get paid in a timely fashion. Otherwise, you're potentially subject to underwithholding penalties and interest. Now, if you're just finding out that underwithholding penalties are even a thing, we did an entire episode on this, which we'll go ahead and link to the description of this one. But bottom line is, you want to withhold a sufficient amount to avoid underwithholding penalties. And there's generally two ways you can do this. Number one, you can do quarterly tax payments to supplement just the basic withholding from your salary. But if you're watching this late in the year, probably too late to set them up. So the second way to do this is through payroll withholding. The IRS considers taxes that are withheld from payroll as timely no matter when it was held. So theoretically, you could withhold all the taxes you need for the year in a single payroll on 12/31, and that would be considered sufficient in the eyes of the IRS. So how this plays out in practice is we modify the withholding on your salary. So if you're someone who just does a single annual payroll distribution, then on that payroll, we make sure you withhold a lot extra to account for the fact that you haven't been withholding enough or doing any quarterlies. If you're someone who pays yourself with a more traditional payroll setup, like every 2 weeks, then perhaps we consider withholding 100% of your remaining paychecks for the rest of the year in order to get caught up from a tax withholding perspective. Again, ideally, you've been doing tax planning year round and we don't have to rush like this. But if you do, some of this last minute planning can help quite a bit. The third thing we are constantly doing this time of year is setting up solo 401ks. If you're not familiar with the solo 401k, it is above and beyond the superior retirement plan for a self-employed person 95% of the time. I'll go ahead and link an article in the description of this episode that we did breaking this down more in depth. But bottom line is, if you're wanting to defer and get a tax deduction of maybe 40, 50K, all the way up to 69K plus potentially, depending on how old you are, a solo 401k is your way to do that, right? It is a thing of beauty. It's not too bad to set up. You can set it up and configure it so you can do all sorts of fun things with that solo 401k, like take loans against it, invest in real estate through it, right? There's all sorts of cool things you can do with a solo 401k. But here's the deal. A lot of people primarily set it up for tax purposes, right? They want the tax break associated with that solo 401k. And with a lot of other retirement plans, right? Most retirement plans, like an IRA, right? If you go file your taxes in the spring, you find out that you owe 4 or 5K or whatever, and you want to set up a SEP IRA or normal IRA, you can do that last minute before tax filing deadline and then fund it to get your tax deduction. You can't do that with the solo 401k. The solo 401k has to be set up by 12/31. So again, just to emphasize, if you're somebody who files their return in spring, realizes, oh shoot, I should have done a solo 401k to get a big old tax deduction, unless you set it up before 12/31 of the year prior, you're not going to be able to take advantage of it for that tax year. So again, before the end of the year, if you don't have a solo 401k set up, this is your chance to get it set up before that deadline. So there you have it, guys. Obviously, a lot more that can be potentially uncovered and optimized last minute. But these are the 3 common ones that we're constantly reviewing with clients that are business owners that sign up kind of late in the year and haven't done any sort of planning. As always, if you need help with your own tax and financial plan, reach out to us at www.modernwealth.com. That's modern, spelt with no vowels, wealth.com. And of course, don't forget to like and subscribe, and I'll see you guys next time.